what triggered the greatest mass liquidation event in history was DeFi derivative exchanges, because it was easy to see what to shoot at. And then at the same time, they broke Binance's automatic deleveraging. And so that caused a liquidation cascade. That was another attack vector. Was it manipulation? I damn well think so.
Do you believe that with the assets going on the blockchain, tokenization, and even more transparency with the blockchain, plus AI, markets could be a bit more efficient? There's less manipulation and fraud?
No, I think that AI actually increases fraud attack vectors dramatically.
This episode is brought to you by iTrust Capital. iTrust Capital gives you a great alternative for buying, selling, and custodying your crypto assets. They allow you to set up a self-directed IRA, which gives you huge tax advantages. You can even roll over your 401k to this platform. And they not only offer crypto, they also offer gold and silver. And as mentioned, the custody gives you another very safe alternative. So many of you know about self-custody. That's a great option, but you can also use iTrust Capital's premium custody accounts, also known as PCA. So with the rise of crypto scams and phishing attacks, a lot of retail investors are losing their shirts. I mean, let's be honest, right? It sucks to hear that exchanges are getting hacked. Well, iTrust Capital does things a bit different here. They use Fortis Bank as their qualified custodian. So they're actually using a bank here, and they have partnerships with Coinbase, Prime, Fidelity, and Fireblocks. They are fully US based, and their client experience team offers direct phone support. So not many platforms offer this. This is very unique to iTrust Capital. And folks, most recently, we heard from President Trump that the United States is looking to unlock 401ks to be able to participate in crypto. Well, you can get ahead of the curve by using iTrust Capital and getting started in that process. And folks, I'm a user of the platform. I have an account with them. If you sign up with my link, which is itrustcapital.com/thinkingcrypto, you can get an exclusive $100 funding bonus. So go learn about this great, safe, and awesome way to buy, sell, and custody your crypto. A great alternative, once again, with tax advantages and a lot of safety, very safe compared to many exchanges. And all the links will be in the description. Check it out. Hey everybody, welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and joining me today is Dave Weisberger, who is the author of the upcoming book, $1 Million Fratboys. Dave is also the co-founder of CoinRoutes, and he has significant experience in the TradFi and crypto world. Dave, great to have you.
Thanks for having me, Tony. It should be a blast.
Yeah, Dave, you and I have been on multiple X Spaces, and we've talked a lot about crypto. You know, one of the things I recognize about you, Dave, is you have a plethora of knowledge about the markets. And I said, I got to get you on the pod to just dig into your brain, man, and get some of the knowledge and get your take on what is happening in this crypto market and as it continues to grow and mature. So I'm really looking forward to the conversation. But let's kick it off with, where are you from? Where did you grow up? And how the hell did you make your way into TradFi?
Well, I was born in Queens, which makes me a Met fan.
Yeah.
And a Jet fan. And I moved to New Jersey when I was, 7, right before the Mets won the World Series for the first time, and grew up in Marlboro, New Jersey, wanted to get the hell out, went to school out in Chicago at Northwestern. I was a debater, so I love to speak. I love to argue. So that comes naturally to me. My biggest regret is not winning the national championship my senior year, losing to the team in the quarterfinals on a very tight 3-2 decision to the team who did win it. And after that, I looked for a training program and ended up at Morgan Stanley in a training program that taught me how to program and build financial technology. And it turns out that I was sitting in the right place because I ended up building the first program trading system on Wall Street.
Wow.
And from there, forced my way into the front office, which was a totally different world back then. FinTech didn't exist, dude. So we were back office. The front office they were basically a bunch of frat boys. And that's what the book is about. It starts off as a technologist's journey through Wall Street and how it's changed over the years, filled with lots and lots of stories of craziness. So, that's how that started. But, I went from Morgan Stanley, I ended up I found my way in Solomon Brothers, running their international program desk in London, actually starting that business. Ended up getting involved on the quant side, building quant models and running automated market making and StatArb for what became Citigroup through mergers. And then I went to a company called 2 Sigma. Was a small little hedge fund when I joined it, not so small now, or even when I left. And around 2017, through the vagaries of what had happened, I ended up in a situation where I was thinking about what to do, and I was doing some consulting after having left a short gig at another job. And my son, Ian Weisberger, had the idea to start a firm to help people navigate crypto markets. Now, of course, my first question was, what the hell's
Mm.
crypto? In 2017, I didn't know the difference between Bitcoin, which I had vaguely heard about. I had friends who told me I should get into it 2 years earlier. I wish I had, because if I did, I'd be a billionaire, but so be it.
Mm.
In any event, he told me and showed me how bad the markets were, and so we set out to build effectively an algorithmic routing platform, which is what's happened. CoinRoutes today is over 50 people, probably the largest third software vendor for handling derivative transactions worldwide, and has done very well. And Ian is running the company. And as you say, I am semi-retired from CoinRoutes, just a strategic advisor and board member, but I'm spending my time writing the book, something I've always wanted to do, which basically exposes a lot of the crap that happened on Wall Street. Why? All from
Mm.
my first person perspective. So, that sort of brings you up to today.
That's incredible. And I'm looking forward to reading that book. And I'm not saying that because you're on here and it's a cliche thing to do, but I'm very fascinated with the history and the inner workings of Wall Street and TradFi. And, I've watched a lot of movies, I've read a lot of books about these things, and it just fascinates me. And their interest even existed before crypto, but even more so now because the system is changing, so to speak. So I'm really looking forward to that. Do you have a timeline estimated when that might?
Yeah, I mean, I've written I have a publishing deal is signed with John Wiley. I promised the book first draft by June. Frankly, we're over 60% written. I have a couple people helping me. I write the dialogue and the narrative, and they're helping me punch it up. And we'll have that out the door, I suspect, by March. Because, as I said, I've written over 50,000 words. They only want 70. I'll probably
Wow.
write 90 and then cut it. But, the book starts, just to give you a flavor for it. This is just it's fascinating to me. So after a year and a half of sitting in cubicles, literally like something you would see in the TV show The Office, cubicles, very quiet, clacking keyboards, green terminals, because color, what the hell was color back then? And hushed voices, or a loudspeaker that will call you to a conference room to do things. I got called one day to walk over to the trading floor. And the trading floor were like the mythical beast, the place where the action happened, but very few people got to see if you're in technology. And quite literally, the elevator doors opened, get hit by this wall of sound. And the very first thing I hear is some frat boy trader with his feet up on his desk talking to his friends. I'll spare you the language for now, but you can read it in the book. Basically bragging how he was going to get laid that weekend. Almost immediately followed by a smarter, older trader yelling over the desk, "There's no way your sorry ass is getting laid. I got $500, says it won't happen." And this is literally the very first, within seconds of stepping on the trading floor, having been like this. And the book moves from there through and we talk about how program trading got started. What did we do? What was the journey? How did automation work? And what I think a lot of people have no understanding of, particularly in the crypto space, is a lot of what you see as the Wild West today in crypto, it's already happened. And a lot of the friction that crypto fixes, people don't even understand, how bad it was. There are so many people who think that markets are rigged now in the equity markets, the stock markets. They have no idea how much worse it was 30, 40 years ago, not even the slightest clue. And so I go through a lot of that transition, talking about just exactly why it is that I'm so certain that the banks and the incumbents are going to fight, how they're going to fight against the stuff that we're doing, Tony. And because I've seen it before, I've had it. You can't imagine how many times I have been yelled at in public on trading floors for taking away money from these guys who basically all I was trying to do was automate and make it more efficient, and they hated it. And so having faced that and gone through it, I think it's very illustrative. So that is a lot of what's being talked about, but that's just the first chapter, and it goes from there.
Pardon the interruption. Hi, I'm Tony. I'm the host of the Thinking Crypto podcast. I wanted to ask you if you can please support the podcast by hitting the like button, subscribing if you haven't as yet. You can leave a comment below as well. And if you're listening on a podcast platform such as Spotify, Apple, or wherever you get your podcasts, please be sure to follow and hit the 5-star rating. I'll let you get back to the content. Thank you so much. As you're talking about that, it reminds me of seeing some The Wolf of Wall Street.
Well, there's a lot of stories in here.
Yeah,
And put it this way, it will definitely be at a bare minimum, if it ever shows up on a screen, it'll be PG rated for sure, because I'm not toning down the language or what actually happened, some of the things that I was called, et cetera, over time. It's just Wall Street was a very different place. I'm probably not going to have the space to talk about the strippers on the floor and all that other stuff. That's been done. It happened. I'm absolutely witness to it, but not nearly as important as some of the stuff that I am trying to cover. But I always felt it was important for people to understand that technology has been improving markets for decades, and understanding that it doesn't happen easily and people don't give in without a fight is a very important point. So whenever you start bitching about how things seem to be rigged by these tech guys, or they're doing this or doing that, understand it's a lot better than it used to be, and it will be a lot better than it is today in 20 years as DeFi and other crypto platforms open up things to competition. But this is a well-trodden path, and if you wanna understand how things are working and be entertained, that's kind of what I'm going for.
like I said, I am looking forward to reading that, Dave, and we'll have to have you back on when that goes live. And then, if becomes a movie or film, that would be amazing.
Well, I'll have to finish it because the first book will probably only go through, 2005, 6, something like that. Then we'll have to write the bridge, which goes through real electronification and then into crypto, which has a lot of stories there too, as you could probably guess.
Dave, you mentioned, some of the manipulation and the things that have gone on, and eventually technology solves some of that. It doesn't solve it 100%, things evolve over time. But I'm curious, where are the regulators in that phase? Are they bought off? Are they just turning a blind eye because, at the end of the day.
It depends on where and what and how you're talking about. So,
Hmm.
in probably the most egregious manipulation I have ever seen in my career, and I think it dwarfs anything that we've seen in crypto with the exception of outright theft like SBF did,
Right.
was the Japanese, index futures market in the early '90s.
Hmm.
There, the largest hedge funds and trading firms colluded to basically rig every expiration. If not rig, understand which way it was gonna go, and they abused the Japanese firms who had this cross ownership problem. So if you were working at Nomura, your company owned pieces of so many of the large companies in the index, you couldn't really trade the individual stocks. And so they could only trade the futures. And so that gave the ability for firms like Morgan Stanley and Solomon Brothers who trade the arbitrage and move it around on expirations as they saw. And we're talking to the tunes of, at the time, hundreds of millions of dollars. That may not sound like much, but understand that the scale of financialization has been so large that hundreds of millions of dollars then is probably, billions of dollars today. And we're
Hmm.
talking about, per firm, per year, maybe even more. So, very, very large scale manipulation did happen. And eventually the Japanese regulators figured out what was going on and, they cracked down on it. But the truth is pretty much everything you think has happened before. I mean, rug pulls are a little different, but that
Sure.
happened too. The
Yeah.
Wolf of Wall Street literally was about a company called Stratton Oakmont, and there were which was so-called boiler room, which
Right.
was trading in these pink sheet stocks. Now, I did see some of that. I wasn't involved directly in it, where these things have no value. They'd run up to hundreds of millions and then they'd run right back down to no value again. So it's not like we haven't seen this before. It's just that with DeFi and Pump.Fun or Trump coin, for Christ's sakes, you see incredible moves up and down in rug pulls where the founders or the people who get in early make more money. That is just speed, but it's not directionally any different than it used to be. But
That
as far
absolutely
as
makes sense.
regulators go, they want to do two things. Understand what regulators want to do and different regulators. I mean, Gary Gensler, he wanted to shut everything down, right? He was told by Elizabeth Warren, shut it down. Our donors, excuse me, the people we fight for, the people who are paying us. Oh no, wait a minute. What you get me? I'm joking around,
Yeah.
but the truth is that the banks had her in their pocket, still do, and she wanted to shut it down, and she was his master, and so he did whatever he could to screw around with the industry. But the current set of regulators basically want to have principles that will make it a fair, even playing field market. And will they succeed or not? We'll see. Part of it is good question is whether they'll be allowed to. But if you've ever read any of the speeches by Commissioner Peirce, Hester Peirce,
Yes.
you would know that privacy is an inherent right and disclosures are the best way to actually decrease most pathology. So if you buy a token and you know that 70% of the supply is controlled by dudes who have absolutely no reason to not sell it into your face after it gets pumped up, that there's nothing stopping them from doing so, and you buy it, well, then you're the idiot and you deserve to lose your money. It's like at this point, if you really want to help out that Nigerian prince, well, God bless. You could do so. Don't expect to see a penny, but you can do so. So, I mean, that's really the point. So, a lot of regulators, the good ones, care about disclosures,
Mm,
and they care about things that are that are unfair that people can't know about. So, for example, FTX, had it been a U.S. regulated entity, they could not have had a back door for Alameda,
right.
not without wearing orange jumpsuits. Now, he ended up wearing an orange jumpsuit anyway because he stole customer funds. But were the market to have been stronger, or were CZ to have waited a year to pick a fight with them instead of trying to knock him out with the go for the kill shot when he did, then it's entirely possible that not only would they have been able to repay the funds that he's stolen without anybody knowing anything about it, but that he also would have gotten legislation through which would have banned DeFi and made FTX have an overwhelming competitive advantage. Arguably, we're better off as an industry that it all blew up. Didn't feel it at the time, believe me. And I can talk to you about how bad it impacted our clients at CoinRoutes. But the truth is that it's the regulators had no jurisdiction. They had no way to do anything. Moreover, the current regulators at that time, I think, were in on it. So, I
Mm,
mean, it really depends. So when you ask that question, regulators are not a monolith. There's different regulators in different jurisdictions, and it changes based on political party, based on individuals. In general, good regulators want to do disclosure-based regulation and just make sure that nothing that you would think objectively is criminal is happening. But there are bad regulators too, and so it's important to keep them in check. So this is not a trivial question.
yeah, great thoughts there, and I absolutely agree with you. And do you believe that with the assets going on the blockchain, tokenization, and even more transparency with the blockchain, plus AI, markets could be a bit more efficient? There's less manipulation and fraud.
No,
Mm,
I think that AI actually increases fraud attack vectors dramatically because it becomes way easier to fool models than it is to fool all the individuals out there with their vagaries and their, what's that? There's an old expression in research, and that is it's not when you want to understand what are the greatest discoveries being made, it's generally presaged not by eureka, I found it, but by, hmm, that's strange. And AI models are not trained to pull on the threads of that's strange. Now, regulate AI models can be used by regulators. And in fact, if you look at the US and you talk to the people at FINRA and other regulators, they are using AI pattern recognition. I do some work with a company called Solidus Labs, which has embedded AI agents in compliance software to determine strange patterns. And so it can be used. But in general, it's probably easier to fool people who are using AI for investments with false patterns. So, for example, good example, if you know how quantitative models using AI are going to react to posts and Twitter feeds and fake stories, then planting a fake story could be very, very profitable. Clear manipulation, but it opens up that as an attack vector. So I don't think so. Now, as far as the blockchain is concerned, the answer is it depends.
mm,
It depends what is transparent. So Bitcoin is way more transparent than most equities, right? Because every transaction is immortalized on the blockchain, except for all the derivatives, which are inside the exchange's own systems, or you have the opposite hyperliquid where everybody knows what's going on. And frankly, what triggered the greatest mass liquidation event in history was DeFi derivative exchanges.
right.
Why? Because it was easy to see what to shoot at. And then at the same time, they broke Binance's automatic deleveraging. And so that caused a liquidation cascade. That was another attack vector. Was it manipulation? I damn well think so.
Mm.
I have no proof, but it was just too damn obvious a time for an incredibly profitable of an attack. And it's called a momentum ignition attack. And there's no providential regulators that could actually do anything about it because you'd have to have jurisdiction. And so that's been an issue in crypto from the beginning. And just to clarify, let me explain it because people want to understand what that means. A momentum ignition attack, the way I'm talking about it, takes advantage of what I would also call liquidity arbitrage. What do I mean? Futures, i.e., not futures, perpetual swaps are 5 times more liquid than spot. Now, sometimes it's 3, sometimes it's 10, but it's much more liquid than spot. So now imagine a world where you painstakingly build up a position long spot, short perpetual futures over several weeks, buying spots slowly and locking it in more or less at the exact same price. And then you pick a low liquidity time and you dump that spot.
Mm.
And then as you're dumping that spot, you place bids way below where the market in the perpetuals. So you break through the price level, you push it down. What do you know is going to happen? Well, you know that that people are going to be forced to sell those perpetual swaps via what's called liquidation, and we see it all the time. So the exchange sells, and you're happy as hell to buy way lower, and so you lock in the average price of this versus this. You lock that in. That is an incredibly profitable strategy, but what has it done? It's probably knocked the market down multiple percentage points, in this case 10, 15, 20 percentage points. And so you can do that. And if you look at the anatomy of October 10th, Bitcoin was 5 billion out of 19 billion liquidated. Yes, it did get liquidated. Yes,
Mhm.
it was part of it. But there were so many coins that were down 20, 30, 40, 50, 60, 70% at the bottom.
Yeah.
And so if you sell the spot down 25%, well, your average price is probably down around 10% because the first 10% moves the market. The first half of your position moves the market less. Then the next half moves it a lot more. So you actually get a good average price. So if you get to buy it all back down at the bottom, you make an absolute fortune. So I think that people, whether it was coordinated multiple people or someone with very deep pockets, triggered this in an incredibly profitable liquidation unwind.
Mm.
And these things become self-feeding. And so that is, I think, what happened. Now, if you send that to a regulator, the regulator, if it was in a one market like the US, 100% they'd figure it out eventually.
Right.
They'd figure it out, right? Because they would be tapping Binance on the shoulder and Bybit on the shoulder and say, okay, who are the big sellers? Who are the big buyers? We have to figure this out. This is illegal. But what's the jurisdiction that's going to police that in crypto right now?
Yeah.
Until there is a dominant market with providential regulators, that sort of thing will continually happen. Now,
Mm.
is it that big of a deal if you know that it could happen? Well, I mean, yes and no. I mean, it's not a big deal if you're not over leveraging. In fact, it creates opportunity,
Mm.
but it definitely hurts confidence in the industry. So people who are saying, why is crypto not rallied when gold and silver are rallying? Understand, you just had the legs cut out from underneath
Mm.
most leveraged crypto traders on October 10th. That leverage event was bigger than Luna, which is what preceded 2022. Now, luckily, we don't have a bunch of other fraudulent companies to go under in
Right.
sequence, like Celsius and Voyager and then FTX. So it didn't destroy the market, but it certainly caused malaise. And
Mm.
it's going to be a while. Historically, it takes many months to come back from stuff like that. And so, yes, that's sort of more of an answer than you were asking about why regulators. But if you ask the question, why do people in TradFi want to see some regulation? What they want to know is that kind of shit isn't happening.
Right.
They don't want people, doing massive audits and horrible, expensive compliance programs, but they do want that.
Do you believe that the crypto market structure bill getting passed will help alleviate some of that, given that the US is the largest capital market? You have big players like BlackRock buying Bitcoin.
If
But
it
also,
passes, yes.
mm,
The if is a problem because the banks are fighting for
yeah.
something that is so. I mean, the only word I can come up with is evil. I mean, when I think of the bank lobbyists on the crypto side, I'm thinking of Montgomery Burns from The Simpsons, right? With his little tented fingers,
Yeah.
excellent. These guys are making, and this is no lie, $180 billion a year in more interest from savings, from money that they park in risk-free stuff like the Federal Reserve or treasuries, and don't pass any of it on to their customers. And they're lobbying to make sure that stablecoins and crypto companies can't pass it on either. That's just insane.
It's insane.
That's the government granting an oligopoly to a group of companies based upon a fantasy. And when I say fantasy, I literally mean fantasy.
Mm,
Because the fantasy they're selling, believe it or not, is if you've ever seen the movie It's a Wonderful Life, we just finished Christmas season, so
yeah.
maybe you saw it. Bailey's Savings and Loan will go under if
Yep.
we don't get to make $180 billion in excess interest. That is a bunch of happy horseshit. If Bailey Savings and Loan in the modern economy were the best at judging the creditworthiness of businesses and were really good and could help foreign capital flows, not foreign, but just capital flows outside of that community to find those businesses, people would pay them, both the businesses and the capital flows would pay them for that expertise. But instead of paying them for what they actually do, we pay them by giving them this interest differential and protecting it. But of course, what happens when you do that? Well, Bailey Savings alone makes a teeny amount of money, and JP Morgan and their friends make a lot of money. In fact, JP Morgan last quarter made $25 billion.
Yeah.
So effectively, in order to protect George Bailey, we're giving JP Morgan, a profit stream that is literally by government fiat. And so that's what a lot of this is about. So I don't know if the banks are going to win this or lose this fight. I don't know if we'll get a bill or not. I
Mm,
would think we would, simply because it would be so bad for people who opposed it going into the midterms that I think there'll be enough senators who are like, do we really want to be known as the people who are subsidizing the banks? And
mm.
I think that could be an issue, but we'll see. It's politics, dude, and I have no notion. All I can say is what's gone on over the last couple of weeks, it makes me sad. That's the best way to express it.
And
But
I've heard
if
that
it gets passed, it will definitely make a difference.
And I've heard the banking lobby, they're building a war chest of capital for the midterm. So I don't know if they're going to try to go against crypto, right? Say,
Of course they will.
yeah, in that way and try to get those senators and different members of Congress.
Tony, which part of $180 billion
Yeah.
is hard to fathom?
Yeah. Dave, your best guess, what do you think the compromise might be? Is it that they say, well, give us 12 months, crypto firms, until we launch our own stable coins and we can offer something like that, even though we know they don't want
I
to?
have no idea. I really don't want to handicap it. Because what I'm going to tell you is it doesn't matter. For a year or two, it matters. But in the longer term, every crypto company will end up with banking licenses of some sort to be able to become payment processors. And they're going to all offer on the same platform the ability to move money from the deposit stable coins
Hmm.
into investment products. And those investment products could be Bitcoin, it could be staked Ethereum, managed staked Solana, or it could be money market funds like BUIDL.
Right.
And so they're going to give you the ability to keep your checking account at wafer thin amounts and sweep money back and forth in order to meet payment deadlines. And once that happens, and that technology is there, all this goes away because that's what people are going to use.
Yeah, absolutely. Going back to what happened with Binance on October 10th, and the after dominoes falling after that. Dave, do you feel the 4-year cycle believers that event may, like you said, be a self-fulfilling prophecy because everyone believed in that situation happened? You said it cut the legs out from the market, or there is a possibility for us and maybe within the next 6 months to have a recovery to a new high.
Well, anything's possible. So let's understand something. Markets are never predictable to the extent that people think they are.
Hmm.
I always use my favorite example. The 4-year cycle stuff started with the halving, and there were some very good reasons for it. I've talked about it at length. It's not all that interesting. 3 data points of 3 cycles that worked is to say that it's not statistically significant. It's almost fraudulently stupid to even have that conversation. All I'll say to you is a far better indicator of what the stock market would do was the old Super Bowl indicator. It had a 16-year winning streak of if an old AFL team won, the market was lower at the end of the year. And if an NFL team won, then the market was up at the end of the year. It was perfect. And it was it was 16 years in a row at one point, and up through the 90s was at 92%. Far better correlation than the 3 data points of the 4-year cycle. And complete and unadulterated bullshit.
That is incredible that that was something that was used and
It
people
wasn't
reference.
used, it was a curiosity.
Okay.
It's a curiosity. People fall for historical patterns without
Mm,
understanding the what goes on underneath the covers. So I'll give a very specific example with regard to Bitcoin. People are now looking at the chart saying, "Oh, this looks exactly like 2022."
right.
Even if we assume, even if we assume that we're starting from a higher peak of double, that means we should go to 32,000 because it went to 16,000. Sounds reasonable because it looks very similar on the chart pattern. That's true. Except for here's a couple facts for you. Fact number 1, even after falling 15%, the hash rate, from the October 10th high, the hash rate is 6 times what it was in 2022. 6
Mm,
times. Okay? When you do your math, you scratch your head, you say, "Wait a minute, but 6 times 16," and you do your math, you say, "Wait a minute, that's higher than it is today." And it's like, exactly. And so that just doesn't compute. The no the amount of coins that have rotated already from holders that had it from $10, $100, or $1,000 to new holders and new cost basis is at least 10 to 15%, if not 20 to 30% of the supply. That
mm,
is a big difference. And the new holders are people who have been talked into buying it not on leverage, but as small parts of their overall portfolio. Because people in the Bitcoin world ignore the fact that it's a tiny little market.
yeah.
Let's be simple. In the world of traditional finance, silver is getting a lot of hype and a lot of story, but it's still not considered significant. And silver today, after this rally, is way more than double the market cap of Bitcoin. So why would anyone think that the average portfolio managers, which have 10, BlackRock alone has 10 trillion plus dollars. Bitcoin total market cap is 2.
Mm,
Why would anyone think that what's happening is relevant? These are people who, when you talk to the asset allocators, or like people like Matt Hogan from Bitwise and others, he'll tell you that when you talk to the financial consultants that are putting money in Bitcoin over the last year, those are multi-year allocations. And so
mm,
understanding moving from bottoms are formed when you move from weak hands to strong hands. The crypto community, the people most dedicated to the ideals of Bitcoin and crypto, are now weak hands. Why? Because some believe in the 4-year cycle. Others are saying, wait a minute, my life changed. I can't let the whole thing go. I need to be out. And that's why we're stuck in a range. I mean, I'm looking today, everyone's like panicking. Oh my God, Bitcoin's over, it's dead, it's whatever. We're at 89,000. The range has been from 84 to 94. Yeah, we got a little above, we got a little below, but 84 to 94. We're almost right in the middle of the range, and you got people panicking.
I guess it's human nature, right? We want to see we want the certainty of patterns. Like, oh yeah, it must be like 2022. Let's line the fractal up, and right. It's just human nature. People want to know what's coming next versus, oh no, it's this time is different.
Tony, all I can say is this: there are people who they finally, when there finally is a stock market crash of 20% in like a few days, there are going to be people who are going to be trumpeting, you see, I told you, I got it right. And the answer is yes, they predicted 20 crashes and got one of them right. And so, people like to predict the spectacular, but more often than not, you get the boring.
Yeah.
More often than not, you don't. And so, what the term that I like to say, what's going on in the world of crypto in particular, is time-based capitulation.
Mm,
In some coins, it's been actual capitulation. Just sell it all, get me the hell out, and I'll wait until the prices are double or triple here and people are excited again. And that's a thing, right? It's a very famous meme, that how you have the 2 tables, one with lines and crowds of people out the door, and it's at, we'll pick the number, 100,000, whatever. And another one at 50,000 with nobody there. It doesn't really matter what the prices are. That meme is very real. That's human nature, and it's unfortunate. I always make the analogy to anyone who's out there in the audience that's ever skied, and I'm not a great skier, but I know this. My brain knows it. It's hard to convince my body about it. But skiing and investing are very similar
Mm,
insofar as if you start to fall when you're skiing, human nature, your first reaction is to pull back. If you pull back, you are going to be the agony of defeat. You're gonna end up with all your stuff all over the mountain. Well, my kids would like to yell out yard sale because you will fall. If on the other hand you lean downward into the mountain to go faster, in all likelihood you'll be able to save yourself and catch your balance.
mm,
In investing, if you sell when your emotions are telling you, I'm afraid, and buy when your emotions are telling you that you're euphoric, you're going to be losing piles of money. It
yeah.
is almost always better to buy when others are fearful and sell when everyone is greedy. That's the Warren Buffettism, but it's more or less the same. So it's always the best buys are when you're uncomfortable. There is one caveat. You have to be watching what your investment thesis is. Don't buy a company or an asset just because it looks cheap compared to where it was. Understand why. As long as you have a clear understanding as to why you're buying what you're buying, then unless that why changes, I wouldn't change. If the why changes, all bets are off. There's lots of examples of that, by the way.
Yeah, and personally, I've had to learn that, and I'm thankfully, I have that financial education. To your point of when there's blood on the street, that's the time to be buying. Obviously, like you said, you got to know the why, but going against the herd and being contrarian, not listening to Jim Cramer and financial news.
Well, I mean, look, you could make money trading based on momentum.
Sure.
I when the moment, and there are really good technical traders who trade based on momentum, and in all cases, the ones who are successful have two things in common. Thing number one is discipline. They position size they take their position sizes seriously. They don't pyramid upward and over leverage when the trade is already profitable. And second, they all use trailing or some version of stops, which tells you, okay, this is when I'm clearly wrong and it's time for me to reload. In short, it boils down to letting your winnings run and cutting your losses, but it's a little bit more complicated than that. If you do that, you can trade momentum quite well. And in fact, turns out that that sort of strategy, which I will define, you could define it in a lot of different ways, is probably the most profitable trading strategy. Investing strategies, the best ones are the ones find something that's cheap and hold on for dear life through the cycle using the trading type strategies to accumulate more, right? So there are products out there that help you do that bias you towards a long-term accumulation and use volatility to do that, things like Arch Public, et cetera. It's complicated is the short answer, and you should have a plan, and you should stick to that plan and be disciplined about that plan. And yes, there are tools that can help you do it better. And that's true in every asset class, not just crypto, but probably more so in crypto than most others for a lot of reasons, most notably all the shenanigans that I've talked to you about already.
Dave, not financial advice, but what do you hold in your crypto portfolio?
Well, I'm dominant Bitcoin. And I have positions in Solana, and I tell people this, and in BitTensor. BitTensor has done very poorly, but it's had its moments. Today, I think it's down again from where it was. It was at 300 like 3 days ago. It's at 230 now, so not for the faint of heart. That's an AI play. It's not a huge position, but it's big enough that if it takes off, I'll do well, and if it doesn't, so be it. Solana is a long-term play for mine, and I have small other positions, some of which are dumb. Like, I got it on the Zcash thing, and yeah, I didn't expect it to do well. It'll probably have another pump at some point. I'll probably sell in the next pump. These things are silly. I have a small position in XRP. They have the best marketing team on the planet. Uh, don't know where the value is. I think that I could see it outperforming in a rally. And so I have no problem owning it. I think that some of the people in their marketing team are among the most delusional in all of crypto, thinking that a company could control 40% of an asset and that asset could become worth more than the entire stock market of the United States. It's mind-boggling to me that people could think these things and actually walk and chew gum at the same time. But hey, that's what makes a market. And yes, I'm always this irreverent to people who are dumb. But that doesn't mean that it's not investable. As a trade, it might be, but right now, it is down like 20% from where I bought it, but so be it.
Are you
Yeah.
swing trading or are you holding like you're doing this?
No, I almost never trade.
Okay.
The problem with trading is until I am literally done with CoinRoutes, I don't trade. And the reason I don't trade is I don't want even a suspicion that I see what some of the best and brightest in trading are doing, and I'm copying them
Mm.
without their permission. So I don't. Now, the truth is I don't look at their positions. In fact, I don't even have access to them anymore. But that's why I started with this. The one point that I will tell everybody, and it's funny because I'm old, so I think of old TV shows as a great expression. There's one of my favorite, best written TV shows in American history was called The Odd Couple. Without going into the show, there was one episode with a guy, a famous old-timey actor named Victor Buono, who also played King Tun on Batman, if you can believe that. But he played an occultist, and he came to their house because they thought that they had a spirit in their air conditioner. It turns out it was a bird trap. And he goes, "We have I can't do the accent great, but he goes, "We have an expression in the spirit game. What you don't know can hurt you very much." And I've always laughed about that because trading is the same. So even when I traded professionally, and I did for decades, uh, even when I traded professionally, if I took a vacation and actually unplugged, I would never establish a new position for at least 2 days.
Mm.
Now, today with the internet and with the ability, you could probably get back into the market quicker. But the point is, if you're not trading full time, sitting and understanding, having a developed thesis, if you're swing trading, I don't want to be making positions. So I told you I'm writing a book. I'm spending time on X building an audience. Uh, these are things which keep me from trading full time. Plus,
Mm.
to be honest, it's Miami Beach and I'm kind of enjoying my life. I
Yeah.
don't want to sit in front of a terminal all day long. And
Um,
so if I'm gonna be able to unplug, I'm not gonna trade. Were I to be trading, I would be sitting literally staring for 8 to 10 hours a day. And even though today I would have AI bots staring for me and just using my judgment to review it every couple
right.
of hours, I wouldn't actually be staring at screens anymore. That's insane because you can automate a lot of that, but still would have my attention. And I'm not doing it. Now, does that mean that you can't make money trading? Of course not. There are some really good traders out there who consistently make money. And I can certainly advise people on how to set themselves up that way. But I don't have the patience to do it right now, nor the attention span that it requires.
Mm. Dave, meme coins, you and I have talked about it on X. Um, I believe in a free market, but also I hate some of these meme coins. I hate the Trump meme coin. I wish he didn't do that. What do you think happens to the meme coin market?
Well, first, I'm going to polemic the Trump one because it really pisses me off. I am Republican. I'm a small L libertarian, so I am a pro-choice, not pro-life Republican. I think there are quite a few of us, actually. My friend John Deaton running in Massachusetts is another one. People who believe in small, limited government, people who believe that free markets should work, but people who do believe that there are some things the government should provide, right? But we can't be giving the banks, the insurance companies, the pharma companies, the big food companies, all the power like frankly the Democrats have over the years. So, I come from that position. I think that Trump launching his own meme coins at the time that he did them set crypto back and caused caused the 4-year cycle to be broken from the day that he did it. Because from that day till for the rest of the year, the market was down because
Yeah.
I think you took half the population of the United States and said, "Fuck this crypto shit." Because these are people who if they heard of Trump curing cancer, they would say, "Damn, why is he being unfair to those cancer cells?"
Right.
So, identifying an asset class with the Trump name and doing so in such an obviously grifty way was just horrendously bad. Now, you could make an argument that unlike some of the other grifts, he was doing it to make his followers money, and okay, you can say that's true. Doesn't change the fact how much I hate it, but that's not the
Yeah.
question you asked me. But that I did wanna say.
Yeah.
Question you asked me is what I think about memes. I think meme stocks and I think meme coins can make people money if you're quick or if you understand cultural trends. I think that in general, they gravitate back towards 0. So you have to understand which memes you're talking about. Like a Birkin bag is a meme. It's
Mm.
the same $30 worth of leather that's worth $30,000. And it's held its value because it's an enduring meme. Those are very rare. Some of the other bags out there, not so much. Pokemon cards, enduring meme. If you have, mint Charizard from the first, its first edition, they're worth a fortune. Baseball cards, same thing, I think. I mean, I own baseball cards from the 70s in a box. Some of them are wrapped, some of them are not. One of these days, I'll figure out what they're worth. It's not that much. It's like about a full shoebox full. I was good at flipping, but flipping cards damaged them, so not so great. But anyway, so some memes have value. There's always collectibles, etc. A meme token that provides value to the holder could have a place in an ecosystem, but I don't know that we've seen any of those yet.
Right.
Right? Maybe we will, maybe we won't. Maybe Doge builds a payment network into X, maybe not. I can't think of how Fartcoin could be worth anything more than zero, but, hey, who am I? I do wonder about things like, Pudgy Penguins, which have actual figures that could be used as marketing and copyrights, et cetera, could create profits that could accrue to token holders if done correctly. But one of the things we have to break is what Gensler put in. Gary Gensler in the last SEC effectively, in one of the sneakiest ways to help destroy crypto, made it so you could launch a coin as long as there was no economic value that would go to the person who bought it.
Hmm.
And so people speculated on the basis of what I would call musical chairs theory. I'm going to buy it and I'm going to sell it before the music stops and I'm going to make money. And people do that. And Pump.Fun is basically that.
Yeah.
There's no enduring value in any of these things unless they become an enduring meme, which is 1 out of 100,000, 1 out of 1,000,000. I don't know. I mean, it's less than a lottery ticket. So it depends. But could some meme tokens be turned into pieces of a profitable enterprise? Yeah, it could. To my knowledge, it hasn't yet. I mean, I remember back in the day, I bought Bored Ape Yacht Club's token. Boy, was that a mistake. It went up after I bought it, and then it went way down. And, who knows what would have happened in a world where they could have given value to the token holders. I don't know, but it never happened. And so when you ask me about memes, my first point is, yeah, there's always going to be the odd case that people are going to look at and say, oh, look at how much money this made.
Yeah. Yeah.
But there's a lot of, but that explanation is the same explanation that you give into, there's a reason in a casino that the biggest slot machines with the highest payouts have the big payout right at the front by the casino doors. Because then when everyone walking into the casino say, oh, wow, these slot machines are paying $1.5 million if I get it right. Then you go farther into the casino and you do a different slot machine, doesn't have that.
Right. Yeah, great point. And we'll have to wait and see. With all these different tokens, I'm also interested in seeing if businesses like Amazon or Walmart launch their own tokens. But, exactly what you're highlighting, it actually has value. Maybe you hold it, you earn rewards, discounts, but it trades in the open market. Do you see enterprises and businesses launching their own tokens?
Yes, after there's clarity.
Mm.
Let's use Amazon as an example, though, because I think it's important to understand. Amazon could launch their own payment token, their own stablecoin, and maybe they will. I don't know. They certainly, just for the same reason that every one of these companies launches their own credit card co-branded with MasterCard, where MasterCard makes most of the profit. With stablecoins, the companies will make most of their profits. They'll split it with stablecoin issuers, yada, yada. Okay, but let's just take that off to the side. That is going to happen. There's every reason to believe, just like you have a Costco card now with, I think their Visa, and other companies launch with MasterCard, you're going to get stablecoin cards issued by corporations that have scale. But there's one other thing that people always forget is that when you're trying to build a business and achieve scale, that's where tokens could become particularly useful. That's a way that you can incentivize your early customers, your early users of a service or a product. And if you could monetize that, so much the better. And then you could use that to raise money. So think of it this way. Now, he doesn't need it, obviously. But let's just say, for the sake of argument, Elon wasn't the world's richest man when he was building Tesla. And he wanted to do full self-driving. Instead of charging everyone who bought a car $12,000 for a lifetime of it, which, by the way, he's canceling now because he realized that those of us who bought it got a great deal. Now he's going to turn into a subscription model, which will cost lots more. But he needed the money up front. in order to satisfy shareholders, etc. But now imagine that instead of doing it that way, that you sold tokens, and if you own the tokens and stake them, you would get that service or a major discount on that service. That's a way of raising capital without diluting your equity or
Mm,
without hitting debt on your balance sheet. Lots of founders will start to think about that as a way of raising capital.
yeah.
You cannot do that legally because it's undeniably a security, and there's just no way to trade it right now. So that is going to be part of the capital structure in a decade.
Mm,
When it will be part of the capital structure depends on regulation. Because companies, one thing they won't do is taking a risk. Is the instant you get involved in securities regulation and litigation or punishment, any potential profit you've made from it is gone. It's so expensive.
mm.
And so nobody is taking any risks on that in established companies.
That makes sense. But I'm really looking forward to, some of these brands, the ones that I've used, having tokens because if I can get rewarded for participating, staking, whatever it may be, and then maybe they partner with other retailers and I can take my Amazon or Walmart token and go spend it at Starbucks or wherever, that would be pretty cool.
Well, think of it this way, just like air miles. I mean, I use a credit card from one of the airlines, which is where I got my executive platinum, for status for it because it's the one that's based here. The American is based in Miami, so that's the one I used. I mean, would have been willing to invest in tokens that convert that same right? Well, yeah, maybe if American Airlines needed to do that to buy planes, that might have made sense. I mean, there's all sorts of things that could make sense, all sorts of new business models that will be opened up that have nothing to do with the tokens that exist today, except for the technology that underlies those, and except for potential DeFi platforms, you might be able to trade them. So it's one of those things that you have to think through what will actually happen. Is that a big use case for crypto? I don't know.
Mm,
I have no idea,
mm.
but it's real. I mean, it does make sense. So we'll see.
So with that in mind, and all these tokens being launched and blockchain rails powering a lot of the economy and markets and so forth, Dave, it's 2035. What does the stock market, what does the crypto market look like? Are they, you know, there's a bit of convergence where there's not a difference?
If the United States wasn't screwed up with two different regulators, one for commodities and really for futures, and one for securities, then convergence is guaranteed probably by that point.
Mm,
I was saying 15 years, but I said 15 to 20 years, 5, 6 years ago. I still think that's probably about right. So I think that the technology underneath the stock market will use blockchain rails because it is so much more efficient. I think that fungibility, being able to trade IBM in multiple currencies and stable coins on different global exchanges will depend on whether the SEC will allow companies to do that.
mm,
But if they are fungible, then they will be allowed. And then the question of how do you regulate it, et cetera, will get litigated. That will be the next thing that gets litigated in that. When I say litigated, I literally mean litigated. I wish that wasn't true. I hope that it would be nice to think that the Asian, European, and American regulators could all agree. But right now, there's enormous frictional cost in stock markets around the world if you want to buy or sell outside of your own market. So if you're in the US and you want to buy a stock that's a non-US stock, you can buy an ADR. And for the top market cap, you only pay probably $1 billion in extra cost to the ADR issuers who hold it as depository receipts. It's crazy how much money they make on it. If you go down a peg to the less sponsored ADRs, there you're paying bid offer spreads that are in multiple percentage points whenever you trade it. And if you go down a peg beyond that to the gray market ADRs, you're paying 15%. And so crypto immediately, once you're on blockchain rails, changes that all to be, dramatically cheaper and dramatically more efficient. So I think that's inevitable. What is not clear is what happens to non-security crypto assets.
mm,
Layer ones, layer twos, you call them memes, call them whatever. And there, it looks like the CFTC wants to stake out an ability to regulate in a similar manner to the way that spot equities are regulated. But we'll see. But what the CFTC does regulate is derivatives, which, by the way, we already said has 3 to 5 to 10 times the liquidity of the spot. So I would think that these things will all end up being seamless with a similar structure. But in order for that to happen, we need to have logical politics. And honestly, Tony, I don't think I think saying the word logical politics may be the biggest oxymoron that have ever come out of my mouth. So it's really hard to see. In the long run, you like to believe that sanity will reign, but for those who aren't paying attention, we are clearly in a fourth turning. And I don't know whether sanity is going to reign. And I don't know when it will reign. But
Mm.
assuming some sanity reigns, yes, there will be convergence.
Dave, they're saying fix the money and you fix a lot of the world's problems. Do you believe that with AI and blockchain technology, we will be able to solve the currency debasement problem, or that's an ongoing thing forever until, I don't know, 100 years from now, they figure out something new? Could blockchain and stablecoins see?
I wish I could answer this differently.
Hmm.
Fix the money, fix the world's problems. A little overstated, but
Hmm.
directionally accurate.
Yeah.
Ever since the creation of the Federal Reserve, ever since the Nixon put it on steroids by taking us off the gold standard in 71, the pathologies that even the Davos crowd talked about this year
Yeah.
became obvious. It was prioritizing capital over labor and creating artificially low cost of capital. That's been being done basically since 1913, since the creature from Jekyll Island. For those who don't know who that is, that's the Federal Reserve was created. Fixing that will eventually become the answer. In the short run, populism will attempt to paper over it. There are two types of populism: the socialist populism, which will create a far, far bigger crisis, or the right-wing populism, which will create its own set of crises. But in both cases, politicians who love to spend other people's money are still in charge. The only real possible way for us as a society to get out of this world is if gold and Bitcoin, or preferably both, become a much higher percentage of overall assets and become a measuring stick by which politicians are measured. So, like, for example, instead of saying, "Oh, look, the S&P is at an all-time high," or, "Oh, look, the DAX in Germany, or the Euro stocks, if you're doing it Europe-wide, is value it in gold and take a new look." People don't do that. Value it in Bitcoin and take a new look. People don't do that. Once they start doing that, they'll realize that what they've been buying and going up, for the most part, isn't because they're buying great companies that are doing better. It's that the dollars or the euros or whatever they're measuring themselves in are getting debased.
Right.
Until that becomes public common knowledge, to where politicians are punished for that sort of behavior, it ain't going to change. So yes, fix the money, fix the world, but the technology is never enough to do it. What has to happen is it translate itself into power, or that power has to be noticed by the electorates. And I think we are a long way from that, sadly. I wish that were not the case. In fact, in a way, it's good if you're a Bitcoin holder, because if the politicians thought we were close to that, they would beat the crap out of it. That's arguably why Elizabeth Warren hates Bitcoin so much,
Right.
because they don't want it to get powerful. If Bitcoin became as big as gold, our people would be saying, well, this is because the government's spending too much. We shouldn't be allowing this to happen, blah, 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 blah. At which point, then they take away the punch bowl from her. She can't give out free booze. Well, there you go. So I think that people, while fixing the money, fixing the world is overstated but directionally correct, to do so requires political change. And that's the unfortunate reality, because as long as people are elected and they get higher vote totals by spending other people's money, they will continue to do so. Sorry
Yeah.
for being a downer.
No, no, no. I absolutely agree with you, like 100%. And I just, as you were saying that, I thought of if the government could put spending on the blockchain, which I know Elon tried to do, but that's not happening, I think, now. But maybe future generations will do that once
Well,
blockchain.
they should. I mean, the biggest single grift, the thing we've learned, if you follow Mike Ben Cyber or Data Republican or any of these people who have been tracking this for you, what we've learned in Minnesota, absolutely on video, is that there is a grift that goes on. We are spending, a huge percentage of our federal budget giving money to non-governmental organizations. The best data I saw this morning, some estimates out of some think tanks. I think JD Vance said it. Less than 12% of humanitarian aid goes to people in need.
Mm,
And humanitarian aid is a fraction of
yeah.
the total amount of money that goes to, quote, charitable organizations. That is the biggest grift in the world. If all of that were put on blockchain and was only able to be on blockchain and you were able to trace it so that you knew when you were giving to the National Endowment for the Democracy that they spent their budget, that 90% of their budget went to this other network and web of these NGOs who are totally unaudited for how they spend their money. If you change that to every dollar that the federal government gives has to be tracked to its ultimate source, all of a sudden it's really hard for the grift because
Mm,
sunlight's the best disinfectant. That is one of the reasons I think that Elon got pushed out because both parties benefit from this corruption. And so the last thing they want is a policy, which really wouldn't be that hard to do because the technology already exists to track all the corruption. They
yeah.
don't want it. Eventually, there will be a populist uprising and it will be demanded, but I suspect we got to go far lower first. When I say lower, I mean much worse corruption before it gets fixed. I hope I'm wrong. I want to be wrong badly.
Yeah, Dave, I'm not saying it's because you're on, but I absolutely agree with you. And I think about these things, and I'm a student of history and human behavior. And to your point, some sort of populist uprising, unfortunately, may have to be the catalyst, just like in previous empires.
It's
Um,
always the case. I mean, the good news is like if you look at what Milei's doing in Argentina, he's doing some things that are proving the point pretty well. Of course, even he had the meme coin thing, which was a disaster. And you just shake your head and it's just like, can we have nice things? And
yeah.
the answer is, unfortunately, with human nature being what it is, probably not. At least not now. As I said, Tony, I want to be wrong. I really do. I'm sorry that I'm such a cynic, but I can't help myself.
No, no, I I agree with you because to your point, it's human nature playing out, and whichever party gets into power, they become close to the money printer, and then the temptation's there.
But
Uh,
both parties are in that's the thing that really pisses me off. Yeah, you're right, but it's not just that. There's a reason why Congress tends to, vote the way they do. They vote for their own self-interest. What is the job of a congressman? Well, to be reelected. That's on day one.
mm,
So, what are they doing? They're raising campaign cash. That's the charitable way of looking at it. What else are they doing? They're raising campaign cash that, by the way, may pay for their kids', transportation, their food, their this, their that. Who knows? I mean, we don't do a really good job of stopping people from using campaign funds. Or they set up a charitable foundation. And Chelsea Clinton had a nice wedding. Who paid for it? The foundation. How the hell is that tax deductible?
yeah,
But it happened. I mean, there's so much of this. These are just tip of the iceberg things. And yeah, they get people pissed off and they make a great show of doing something. But in reality, all Congress does is holds hearings. They don't do anything about this. Why? Because name someone in Congress that isn't taking advantage of this.
yeah.
And chances are most of them are.
Well, at least we have some sort of solution to opt out with Bitcoin and these assets, right? Yeah.
Eventually, eventually, I think so. I mean, look, I am a big believer. My thesis on Bitcoin is simple. I view it as a relatively likely to exercise option on Bitcoin's ability to become the digital store of value, which would imply a significantly increased price from here. And that's how you have to look at it. So all of these moves, everything you're seeing will be irrelevant in the long run. If you look at 2017 and the action from 2017 on a price chart now, go back in history to Bitcoin you can see that something happened, but it doesn't look crazy. Yet Bitcoin in 2017 rose by a factor of north of 15x before falling by 50, by 80%. But it's a blip on the chart. If you think you're going to be able to see movement between 80 and 100,000 on a chart in 10 years, well, I got a bridge that I'd like to sell you. One that I used to be able to see from my apartment in Manhattan.
Dave, great stuff. We're gonna have to do round two, and I think maybe we could time it with the launch of your book and things along those lines, or even before that. But thank you so much, man. You have such a great perspective and point of views and knowledge. I got some wrap up questions here before I let you go. First, if you could create your own metaverse, what would the theme be?
I I was a gamer. I used to love Dungeons and Dragons, so it would be, an immersive fantasy gaming world, sort of like Ready Player One or one of those other ones. That would be very, very cool. Something that you'd escape from, not trying to recreate reality in your own image.
And rapid fire questions. Favorite food?
Favorite what?
Favorite food?
Oh, food.
Mhm.
It's always been, veal parmesan is a personal favorite. There's so many. There's so many foods. Living in Miami, there's just I'm spoiled for choice. But that's an old favorite, so I'll stick with it.
Favorite musician or band?
Yeah, you're gonna laugh. I'm dating myself now. Probably Kansas.
Favorite movie?
Princess Bride.
Favorite book?
Favorite serious book or favorite just entertainment book?
Yes.
Favorite entertainment book is
And
probably still The Lord of the Rings.
and when you're not
L
working, what are you doing for fun?
A poker?
Ah. Dave, absolute pleasure, man. Obviously, we're gonna catch up with each other at some X space, but really, really great conversation. Thank you so much. And like I
Thanks
said,
for having me.
we got to do round two at some point.
Yep, happy to do so, and sorry for the long answers on political theory. I can't help myself.
No, all great stuff, man. I appreciate your perspectives. Thank you.
Take care.
Thank you so much for tuning in. Please hit the like button, subscribe if you haven't as yet. If you're listening on a podcast platform such as Spotify or Apple, please follow and leave a 5-star rating. Thank you so much.